General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's go to the logs. Feb 24, 2025. That was actually a good idea to put the news. I'm glad I actually revamped the template for Forex Factory. What? Forex. Hold on, watch this. That was the Scooby-Doo noise. Forex Factory down. Is it down right now? Check. Okay. That was 3 days ago. Really? Down. It's down for everyone. It's not just you. The server is not responding. Okay. Well, now I gotta be creative. I need a Forex like economic calendar. Okay. Nope. Dismiss. Tuesday. Consumer confidence. Richmond Fed President Tom Barkin. Yeah, we got quite a bit. Cancel period. Actual median forecasting previous. Okay. So tomorrow we got consumer confidence. That's a red folder and 2 Fed speakers. So that's gonna be a 9. Let's look at this. CME Fed watch. Let's see if this changed. $95%, no change. Still pretty set. No change. We're at 95%. Earnings. I don't think we got no earnings. Not nothing that is a big deal. Earnings tomorrow. Yahoo Finance is they kind of clutch. Yahoo's kind of cool. They don't charge you for stuff like Bloomberg or nothing like that. Yeah. See, I don't like looking at all the companies. I like how Earnings Whisperer just kind of show you the top market cap joints. And I use the Earnings Whisperers on Sunday. So we actually went up. Don't try me. I can screenshot my screenshot. Nothing that can move the Nasdaq. Let's go to the dollar. Dollar on the daily. Looks like the dollar is just accumulating in this candle. Dollar is being held in this. What is this? Let's just mark this candle. Thursday's candle from last week. Thursday's candle from last week still holding. It's being held in Thursday candle from last week. We consolidating or still looks bearish for the most part. Okay, so what happened today? That's actually a pretty good add to the process. It don't take up too much. And this is that old new week opening gap. Let's take this off. Let's take this off too, because it is from the, okay, not that, but this. These prices and these levels. Okay, like how we made the wick for the week. Typical drop today. Nice drop for the day. Even had a nice retracement. And we took out the low. Out the daily low. Let's go to the weekly. Okay, we actually went through 50% on this dealing range. Is this an old weekly low we just got through? It is, because that's where that new week opening gap is at. No, I don't need no alert for this. Yep, it looks like we just tapped it just a little bit. So it looks like we took out old previous week's low. Took out old previous week's low. Also note we broke through EQ of this large dealing range. Still inside the range. And I think we will offset below lows. Like previous month low. Let's go to the daily. Daily. That's a nice smack. Took out this. I still like this. Let's see. That's the GAN box. Here's the. Here we go. Let's see where this is at. It's super low. Got a flat bottom down here. This range is atrocious. I kind of like this as a next level to tag. This whole daily low here, which would be next in line before we hit here. We can take this off. I was looking at that yesterday. It's 21, 240, 75. This is really not that big of a candle compared to these little bitty candles, but like daily range, it don't look that big. It looks average to me. 21, 240, 75 is my next level. 21,240.75 is my next level. Daily low. Let's go to H4. This inefficiency is definitely next. This actually feel this inefficiency, this level here. Now look at this month. Look at this monthly candle. We did. That is worth noting. Do we have a 3-bar swing low now? Right here. Beeping. Beeping. Yep, that is the low. This don't feel like a swing high. This feels like a swing high. How does this feel like? This is higher than this. Oh, okay, it is. Let's do this. Completely left this range on the H4. We got bearish structure right here. This range is done for. Unlike this open price, we already came and tagged it. I don't want to overdo it. Could this month turn into a bearish month? It could. Seasonality says it could too. Note this monthly candle. It's still green. But we are almost at monthly open price. Also note the H4. Inefficiency. I feel we go lower to balance things out and reaccumulate and fair value. Let's go to H1. What is this? Is that some weekly open price from a long time ago that we don't need no more? Yeah. This is Friday, January. This is the start of the month. So that's monthly open price. And we can slide this over. So we don't need this. 21,240.75. That's my target. Let me squish this. We sold from here, from this fair value gap. It's just also this old block right here. So say breaker. Tiny. I bet this is that inverse fair value gap thing CT talking about. Nah, we didn't hit it. All right, sticking with order flow. 21,240. 21,240.75. 21,240. Flat 75 is my target. All right, that's that on that. Y'all have a good day. Peace.